Welcome to the Tech Stocks Daily Podcast, where we dive into the latest movements and trends shaking up the tech stock market. Alphabet Inc., the parent company of Google, has been a beacon in the technology sector, constantly evolving and expanding its reach. Today, Alphabet made headlines for a variety of reasons, showcasing the multifaceted nature of its operations and strategic movements within the tech industry. Starting with its market performance, Alphabet Inc. finished a recent trading session at $138.94, marking a plus 1.94% shift from the previous day's closing. This gain is notable amidst a market environment where the S&P 500 saw a daily loss of 0.11%, the Nasdaq lost 0.41%, while the Dow managed a minor addition of 0.12%. Despite a loss of 9.27% over the past month, Google outperformed both the broader computer and technology sector's gain of 1.42% and the S&P 500's gain of 2.7%. The investment community is keenly awaiting the upcoming earnings release of Alphabet Inc., with projections indicating earnings of $1.49 per share, which would mark a year-over-year growth of 27.35%. Analyst consensus forecasts a revenue rise of 13.58% from the same quarter last year to $65.95 billion. For the full year, expectations are set on earnings of $6.77 per share and revenue totaling $286.48 billion, reflecting respective changes of plus 16.72% and plus 11.68% from the previous year. The importance of such figures cannot be overstated, as they reflect not just the company's current profitability but also its growth trajectory amidst evolving market dynamics. Alphabet Inc. is also making strategic moves beyond the stock market. Sprinklr Inc. announced the launch of a local data hosting solution in the Kingdom of Saudi Arabia, hosted on Google Cloud. This initiative aligns with Google's strategy of expanding its footprint in the Middle Eastern market, aiming to fulfill regional security, privacy, and governance compliance requirements. Abdul Rahman Al-Thahaiban, Google Cloud's managing director for Middle East, Turkey, and Africa, emphasized the collaborative effort to enable secure and compliant data solutions, noting the significance of this expansion for businesses in the region. Amidst these advancements, Alphabet's leadership faces its own challenges. A leaked email exchange hinted at Google CEO Sundar Pichai's anxieties over losing key talent to competitors, particularly Apple. The dialogue revealed Pichai's request for monthly reports on talent losses, underlining the strategic importance of human capital in maintaining Google's competitive edge, especially in areas like artificial intelligence, where Google has faced heightened scrutiny and calls for leadership changes due to perceived stumbles. Lastly, Google confirmed the development of the Pixel 8a, an affordable alternative in its Pixel smartphone series. By addressing a query on Pixel's battery information on its official forum, Google revealed its intention to introduce a detailed battery information page, starting with the Pixel 8a. This move indicates Google's ongoing commitment to addressing consumer needs and enhancing product transparency, further solidifying its position not just as a service provider, but also as a hardware innovator. From market performance to strategic expansions, leadership challenges, and product development, Alphabet Inc. remains a central figure in technology news, reflecting the complexity and dynamism inherent to leading a tech giant in today's fast-paced world. Today, Meta Platforms Inc., previously known for its widely popular social network, Facebook, made headlines after facing criticism from former President Donald Trump. Trump, in a surprising turn of events, shifted his previous stance on banning the social media platform TikTok, instead targeting Meta with his criticisms. He labeled the tech giant as a true enemy of the people in a post on his Truth Social platform, later reinforcing these sentiments in a CNBC interview by stating, "Without TikTok, you can make Facebook bigger, and I consider Facebook to be an enemy of the people." This backlash sent Meta stock tumbling, with shares down 3.74% to $487.19, and sparked a broader sell-off among social media companies, including Snap Inc., which saw a 3.47% decline. Trump's animosity towards Facebook isn't a new development. It's rooted in the social network's decision to ban him following the January 6th Capitol riots, a ban that was only lifted earlier this year. Trump accused Facebook of interfering in elections and being dishonest, claiming, "Facebook has been very bad for our country, especially when it comes to elections." Analysts believe Trump's comments, which seem to be driving Meta's sell-off, could signal a return of the company into the center of political debates, an arena that, historically, hasn't been kind to its stock value. There's speculation that Trump's opposition could lead to heightened regulatory scrutiny or even affect Meta's future growth by limiting its acquisition prospects. Moreover, Trump's recent interactions and the evolving political landscape signal potential challenges for Meta's market valuation and influence, particularly in light of the ongoing discussions about TikTok and national security concerns. MicroStrategy Incorporated common stock Class A made waves today, significantly due to its bold ongoing commitment to Bitcoin. the company reportedly sank over $800 million into buying an additional 12,000 bitcoins, raising its total hold to around 205,000 BTC. This dramatic move aligns with MicroStrategy's known strategy of accumulating Bitcoin as a primary asset, betting big on its long-term appreciation over other traditional investment assets like gold, equity, and real estate. The price of Bitcoin, already up more than 70% since the year's start, saw an uptick partially attributed to the approval of spot Bitcoin ETFs in January, diverting capital into BTC from other risk assets. A significant market catalyst is the anticipated halving event around April 20th, expected to slash BTC supply, potentially sparking further price hikes due to the increased scarcity. Michael Saylor, the dynamo behind MicroStrategy's BTC strategy, touted the company as offering a superior Bitcoin investment vehicle over ETFs, citing intelligent leverage that magnifies return potentials for investors. MicroStrategy leverages its assets to procure more Bitcoin, promising shareholders elevated Bitcoin exposure per share. This strategy aims to cater to various investor preferences. Bitcoin purists get their equity, hedgers enjoy downside protection, and traders can leverage the stock's volatility. MicroStrategy's aggressive Bitcoin investment stance has not only significantly impacted its stock price, propelling it to levels not seen since March 2000, but also highlighted the company as a key player in mainstreaming cryptocurrency investment among traditional companies. Through innovative financial maneuvers like the $800 million convertible senior notes offering, the company has underlined its belief in Bitcoin as the paramount long-term investment asset, setting a vivid example for other institutions to follow. This culmination of strategic investment actions and bullish market sentiment surrounding BTC has brought MicroStrategy and its stock into the limelight, making its moves a topic of keen interest in the financial and technology news spheres today. CrowdStrike is making headlines today, partly due to its exceptional performance in the cybersecurity sector, and also because of a face-off with Palo Alto Networks in the stock market. Let's dive into why CrowdStrike has been the talk of the town, or should I say, the digital world. Starting with the stock market battle royale, CrowdStrike and Palo Alto Networks have been compared side by side for their prowess in cybersecurity. CrowdStrike, known for its cloud-native endpoint security, has seen a demand surge for its innovative solutions, driving its stock up by an astonishing 163% over the past year. One point of differentiation for CrowdStrike is its Falcon platform, which employs machine learning and behavioral analytics for real-time threat detection and response, pretty much like having a digital Sherlock Holmes on your side. On the valuation front, although both CrowdStrike and Palo Alto Networks boast serious gains, CrowdStrike appears to be the more expensive stock with a forward PE of 65.52 compared to Palo Alto's 46.36. But when considering future earnings growth, CrowdStrike shines with a more favorable PEG ratio of 2.60 over Palo Alto's 2.86, suggesting CrowdStrike could offer more upside from current price levels, boasting a potential 19.97% upside as per consensus analyst estimates. But it's not just the stock market where CrowdStrike is proving its mettle. The company has been hailed as the best cybersecurity stock in the market, underscored by its remarkable performance, including a 164% rise in its stocks over the past year. CrowdStrike's edge comes from its comprehensive cybersecurity solutions, spanning identity protection to threat intelligence. Impressively, CrowdStrike eyes reaching $10 billion in annual recurring revenue over the next 5 to 7 years, aiming to capture a significant slice of the expanding cybersecurity market. Furthermore, CrowdStrike's recent fiscal achievements solidify its top spot. The company reported Q4 revenue of $845 million, a 33% year-over-year increase, and an adjusted net income that doubled to 95 cents per share, surpassing Wall Street's expectations. These numbers reflect robust adoption of its cybersecurity modules and strong customer spending. With an annual recurring revenue of $3.44 billion and a projected 30% revenue growth for the next year, CrowdStrike is not just maintaining its lead, but is also setting the pace for the cybersecurity industry's future. In conclusion, CrowdStrike's news presence today depicts a company at the zenith of cybersecurity innovation, with its financial and stock market performance further cementing its leading status amidst growing digital threats. And in today's tech buzz, Oracle has made waves with its latest earnings announcement. Database juggernaut Oracle reported a smashing earnings beat with a sweet side of sales hitting the bullseye expected by analysts. The company's stock took a joyful leap, surging over 9% in after-hours trading, and I gotta say, it was like watching a tech phoenix rise. What's got everyone talking is Oracle's AI-driven cloud computing business. It's not every day you see adjusted earnings jump 16% year over year, with sales cruising up by 7% for Oracle's fiscal 2024 third quarter. Oracle's earnings stood tall at an adjusted $141 per share on sales of $13.28 billion. Yeah, you heard that right. They outplayed the analyst forecast. Chief Executive Safra Catz shared that a growing backlog for the company's cloud-related services has hit an all-time zenith, painting a bright picture for Oracle's future. But peeps, it gets better. Thanks to large new contracts in its cloud infrastructure segment, Oracle's been swimming in demand. The firm's cloud infrastructure revenue skyrocketed by 49% year over year. They're battling it out in the big leagues against Amazon Web Services and Microsoft Azure, offering computing power and storage to enterprises. This is huge because as companies dive into generative AI, they're going to need heaps of data and computing power, and Oracle's rolling out the red carpet for them. Safra Catz added a cherry on top, revealing plans for Oracle to continue snagging large contracts for cloud infrastructure, given the insatiable demand for their Gen 2 AI infrastructure. They're even speeding up the expansion of their cloud data centers to keep up with this demand. Imagine, 43% of Oracle's $80 billion in performance obligations is expected to be recognized as revenue over the next 12 months. That's a lot of zeros, folks. The kicker, Oracle's board announced a quarterly cash dividend of 40 cents per share to be paid this April. Talk about sharing the love. So listeners, what's your take on Oracle's meteoric rise in cloud computing and AI? Are they setting the stage for a new era in tech, or is there more to the story? Share your thoughts and theories down in the comments, because the Oracle saga is just getting started. Today's market sentiment appears to be a vibrant mix of optimism and criticism among leading technology companies, highlighted by major moves and announcements from Alphabet, Meta Platforms, MicroStrategy, CrowdStrike, and Oracle. Alphabet Inc. star parent company to Google showcased resilience with a stock gain amidst broader market losses, ending a trading session up by 1.94%. Despite a monthly loss, it outperformed both its sector and the S&P 500, with investors eagerly awaiting its upcoming earnings report, expected to show significant year-over-year growth. Meta Platforms Inc. faced a downturn, dropping 3.74% after criticism from former President Donald Trump, labeling the company a true enemy of the people. This backlash affected not just Meta, but imparted a broader sell-off across social media stocks, emphasizing the influence of political comments on market performance. MicroStrategy Incorporated turned heads by dumping over $800 million into Bitcoin, boosting its total holdings to about 205,000 BTC. This daring move is part of its strategy to prioritize Bitcoin over traditional investments, batting on its long-term value. The company's aggressive stance on cryptocurrency investment has sparked significant interest in both financial and tech circles. CrowdStrike emerged as a focal point in the cybersecurity domain, not only for its stock market battle royale with Palo Alto, but also for its groundbreaking performance over the last year, which saw its stock rise by 164%. With its comprehensive cybersecurity solutions and a future eyeing significant growth in annual recurring revenue, CrowdStrike's story today underscores the company's leadership in the continuously expanding cybersecurity market. Lastly, Oracle surprised the tech and financial communities with its latest earnings announcement, showing a significant leap in profits and sales, especially within its AI-driven cloud computing business. With cloud infrastructure revenue up 49% year over year, Oracle demonstrated its prowess in servicing the growing demands for computing power and storage in the AI age, prompting its stock to surge over 9% in after-hours trading. The overall sentiment from today's tech news presents a landscape where innovation, strategic investments, and occasionally political controversies are steering market dynamics, portraying a day filled with optimism for growth and resilience amid challenges. Given today's news, if I were to focus on MicroStrategy Incorporated and its dramatic move to invest over $800 million into buying an additional 12,000 Bitcoins, raising its total hold to about 205,000 BTC, I'd lean towards a hold position on this stock. And here's why. MicroStrategy's bold commitment to Bitcoin showcases not just a unique investment strategy, but also a strong belief in the long-term appreciation of cryptocurrency over traditional investments like gold, equity, and real estate. This aggressive stance towards Bitcoin, particularly in light of the current bullish market sentiment surrounding BTC, positions MicroStrategy as a key player in the traditional corporate world's embrace of cryptocurrency. Moreover, the anticipated Bitcoin halving event around April 20th, which is expected to slash Bitcoin supply and potentially spark further price hikes due to increased scarcity, could contribute to boosting MicroStrategy's stock value further, given its substantial investment in the cryptocurrency. However, this strategy isn't without its risks. The volatile nature of Bitcoin means that MicroStrategy's stock could experience significant fluctuations. The company's intelligent leverage approach, while magnifying return potentials, also increases exposure to Bitcoin's price swings. The rocketing highs can be thrilling, but the possibility of steep drops adds a layer of risk that can't be ignored. In light of these factors, maintaining a hold position seems prudent. This approach allows investors to continue benefiting from the potential upside of MicroStrategy's aggressive Bitcoin strategy and the broader cryptocurrency market momentum, while also giving room to assess how the upcoming Bitcoin halving event and other market dynamics play out. Listeners, it's crucial to remember that investing in stocks, especially those with significant exposure to volatile assets like Bitcoin, requires careful consideration of one's investment strategy, risk tolerance, and the broader market environment. Always perform your own due diligence and consider consulting with a financial advisor before making any investment decisions. Happy investing, and let's keep riding the waves of tech innovation and market movements. Today's market activity offered a dynamic showcase of optimism, strategic shifts, and some turbulence across the tech landscape. Alphabet demonstrated resilience with gains amidst broader market dips, illustrating the robust foundations and growth prospects of established tech giants. In contrast, Meta Platforms faced challenges, with stock prices impacted by political criticisms, reminding us of the intertwining of tech companies and socio-political dynamics. MicroStrategy's audacious investment in Bitcoin signals a bullish outlook on cryptocurrency, emphasizing innovative investment strategies in the tech sector. Furthermore, CrowdStrike's stellar performance highlighted the growing importance and profitability of cybersecurity, asserting its dominance in the market. As we wrap up today's Tech Market Roundup, don't forget to like, subscribe, and share this video with others who enjoy keeping their finger on the pulse of the tech world. Your engagement helps us grow and continue delivering the insights you seek. Make sure to return tomorrow for another video where we'll dive into the latest happenings, interpret market trends, and explore what they could mean for investors and tech enthusiasts alike. Let's keep exploring the vibrant world of technology together.